My goodness, is what it is here. My goodness. All right. Well, guys, this is actually what we're looking for. A lot of people who are using one time frame right now are probably jumping into this thing. Let me just show you the problem with that. Here we've got Sunday's opening range, and if you take a look at yesterday's video, I go over this and why we just couldn't be a part of it because it's not a premium setup. You've got momentum and trend to the downside working against you. Why on earth, would you take this long? In this particular case, it worked out. And this is mostly due, most likely, because the 15-minute trend on your trend cloud system was extended, right? This is a modified version of Elliott wave. Okay. So it's going to show us when the trend becomes extended by turning ice blue, and it's extremely effective. So effective that that one instrument, that one indicator, showed you this move, and it's still going, right? What is the problem here yesterday going long? Well, momentum and trend are against you. The breakout, the upside is against the momentum and trend, and therefore it could have just went sideways. This could have turned into a bull trap where it hits a supply zone and then continues the move down. There were too many variables, right? And we don't like that. We like to look at the market in a very objective way. And in order to look at the market in an objective way and follow an objective strategy, you have to stick to that no matter what happens. So we have to be very disciplined and say, well, we're not going to take this because it's against our trade plan. And that's pretty much what these prop trading firms are looking for anyway, right? They're looking for systematic trading. They're looking for people who are going to follow a plan. They're not going to trust their capital with someone who just kind of pushes buttons and wings it, right? So it's not what their risk management team is looking for. So this is actually a very good thing. And if you can show a prop trading firm in your discretionary trading, some people use automated systems, and that's great too if that works for you. But if you're making conscious decisions, about your trading, which is what we do here, we're a discretionary trading system, right? So you're going to have to filter. You're going to have to show the risk management team that you have the ability to filter trades. And when they ask you, hey, why did you not take this trade? Look at the move it made. Well, it went against my trade plan. Well, please explain. You have to be able to very clearly articulate why you did what you did. And quite simply, 3-hour time frame, momentum was below negative 100. The 1-hour time frame, momentum was below negative 100, and we were in a downtrend because price is below the 50 simple moving average, right? So we want to get in on this. We want to get in on the action to the upside here. But when you're trying to choose or guess at tops and bottoms, you're going to have a very difficult time and it could wipe you out. Why is that exactly? Because there are too many variables. There are too many variables at play. And the reason why we like the opening range so much is because we are fixating two variables, the where and the when, right? Where do you take the trade in an opening range breakout? Well, you take it in the case of, let's say, an uptrend, you take it right here. The actual breakout, that's where I'm taking the trade. That is fixated. Okay. When do you take the trade? Well, you have to take it at 9:45 in the morning because that's when the opening range forms. So the where and the when variables are gone, right? They're fixated. Very objective way of looking at the market. Now, if you are using supply and demand zones and you have, let's say, 3 demand zones and you're waiting for that pullback to take place into demand, you're playing the guessing game. Now you've got those two variables that could change at any second. So is it going to be the first demand zone, the second demand zone, or the third demand zone? It's like the demand zone guessing game, and that's what we're trying to eliminate with a trading system. And that's why we developed this modified version of, the opening range. This is the trend cloud way of approaching the opening range breakout. And it's very effective. In fact, it's 70% accurate with 5 years of back tested data. And when we forward tested everything, in competition, we never lost a dime. We never lost a dime of the competition money. And we're going to approach the prop trading firm in the same way. Okay, so that is bringing in $6,000 to $8,000 a month in the prop trading firm, and then copy trading that system. Topstep allows you 5 accounts. Okay, so you can have 5 express accounts, and you will copy trade same system across those 5 accounts. All right, so that's what is that, $30,000 if you're bringing in, let's say if you bring in 3,000 per account, and you can take out half of that. So you're looking at like taking out 15 grand or so, depending on how far you get and how many premium setups there were that month. Okay. And if there is not a premium setup, then you really want to take shorter targets, and you want to make sure that you don't put yourself in a compromising position. Okay. You don't ever want to see that the risk to reward is inverted in any way, right? And you don't want to guess. And let me give you an example of guessing, because there's no trade here until we get above the 50 simple moving average on the 1 hour chart, because that's part of our objective premium setup, right? In order to go long here, this candle has to close above the 50 simple, and then we need to have above positive 100, which it already is. And we need CCI on the 3 hour chart here. We really want CCI in the 3 hour chart to break above positive 100, and then it can pull back and stay above the zero line. Okay, that is what we look for. Okay, and until those rules are violated in some way, we can continue to go long. As soon as we see the 1 hour CCI start to dip below the zero line, we become cautious. And if it breaks below negative 100, that's it. There are no more longs. Okay, so just like in this downtrend that we saw very rapidly, this is a very rapid downtrend that took place. And that's usually what happens in the NASDAQ, especially on these short moves, these downward moves. Your targets are going to be much faster because it doesn't tend to go down for very long. And we've seen that in the NASDAQ. If you trade the NASDAQ and the NASDAQ is your friend, and this personality of the NASDAQ, this is a normal behavior, when it goes down for a little bit, short period of time. You really want to get in on these massive moves to the upside, and you don't have to get in at the very bottom. You don't have to get in at the very bottom. Okay. You can wait for a premium setup, jump on to the full contract of the NASDAQ, take 2 contracts, and make a ton of money. Okay. So we don't need to be in all of this choppiness, trading a micro contract for, $100 or $200 or whatever. We're talking about getting into a premium setup and making thousands of dollars. Okay. And if you're in your own account and you can hold, 2 contracts overnight, you're going to be making thousands of dollars. Okay. And that's what we're after here. That's what we're after, because you've got to be able to let those winners run for, if you can, overnight, or, maybe the trend lasts for a couple of days. Fantastic. If you can let one contract run for the rest of the month, you're really going to be hooked up. So in competition, I believe they want you to be out. I think in the competitions, I think might be able to hold overnight, but in the prop trading firms, they don't let you do that. They don't let you hold overnight, which is fine. And I'm so excited about this because we're going to do so well with this prop trading firm, and partnering with Topstep is going to be extremely lucrative. Several of you I know have gotten paid out already, both Topstep and Apex. So you guys really are, veterans to this. You guys really have this experience, and you've seen the potential. You've seen the potential. So what I want to do is, give you guys an objective system to follow and see how it works out. Let's follow a real objective system and those premium setups. And again, the premium setup being momentum on the 3 hour chart, momentum on the 1 hour chart, and trend on the 1 hour chart, all working together. And then those bonus components, the opening range, let's say we're looking for an upward move, opening range, the candle that forms the opening range, very bullish. Okay, when you have a bullish candle form the opening range and all of your components are met for the upside, that's a leading indicator that the 5 minute candle is probably going to break above, close above the opening range. And that would be your second component, right? Your second bonus component, the 5 minute candle breaking out and closing in the direction of trend. Okay, so when you've got all of that together, those are the days to really give it some latitude. Don't jump out of that trade. Those are the trades to really put the effort into and manage it, because those are going to be the big money moves. Those are going to be that type of setup could make your entire month. Okay. And you don't want to go giving back the profit to these less than desirable trades, these non-premium trades. You want to stay away from that. Stay away from the desire to jump into a trade when you don't have momentum and trend at your back, right? And so the thing that we do here at Trend Cloud is no matter what strategy you're going to employ that day, maybe you're looking for a demand zone, maybe you're looking to get into a supply zone, or a breakout of consolidation somewhere that's inside of a demand zone, or you've got this extended trend that comes down, you're inside a demand zone, you drop down to the 5 minute chart, and you start to see, a break of structure, and then some trend cloud signals start firing off like they did right here. And you want to take that. That's fine. You just want to make sure that you've got as many components as possible working together. Trend, momentum working together across those multiple time frames, and then you can start taking, these other trades that have a lot of variables, right? A lot of moving parts to every trade. Again, that's why we like the opening range breakout, because a lot of those moving parts are disabled, right? The where and the when. And so that's what we really like. Now, here, what's happening here today, very powerful stuff. This is going to set us up really nice for tomorrow. This is going to set us up really nice for tomorrow. Breaking through the first and second ADR checkpoint right now. So massive move on the NASDAQ. What can we learn from this? Well, again, looking at the Sunday opening range, super important, because I have seen the Sunday opening range work out over and over and over again. I wish I would have stayed in this, but momentum and trend were against me. I took a quick scalp and I was like, that's it. I'm not going to get tripped up 10 feet before the finish line. And I didn't want to lose a dime. So I was risking zero. I was risking zero. And in hindsight now, if I risked like $200 or whatever, I would have finished the combine. This would have been I need $800 more, $800 more. This would have been an easy $800 actually, So, but you can achieve that with a premium setup, and that's what we're waiting for. So, I would rather wait, 2 or 3 days for a premium setup. And I can see it, right? If we maintain this upward posture tomorrow morning, we should have a setup to the upside. And I think tomorrow might be the day. I think I might finish the combine tomorrow. Couple of days late. I wanted to finish it by the end of July. So I'm a couple of days over my goal here, but that's fine. That's fine. If it's not there, it's not there. So, and whenever you listen to the risk management team talk over at Topstep, they don't like it when people finish the combine in like 3 days, 4 days. They're going to be like, what is this guy doing? And then once they get into a funded account, they totally blow it out. So that's what they've seen. And I totally get that. So, we're using a system, we're being very selective. That is what the risk management team at Topstep is looking for. And that's what we're going to continue to do here, at TrendCloud, because we want to stick to the rules. We want to show Topstep that we mean business and that we're professional traders, and that's going to go a long way. That's going to pay dividends for us in the future when they fund us, with a live account, a fully live account. I think everybody in the group here has asked a combine in some way, shape, or form with either Topstep or Apex, and that's fantastic. And this is going to be my first combine, right? So I actually learned that these guys were legitimate from you guys. So I really thank you guys for that. This has been an amazing experience, and I wouldn't have had this experience if it wasn't for you guys. So I'm super grateful for that. And I think we've got a fantastic group here. So here we are. We're almost at 10 a.m. Now, let's just take a look at what happened today. Let's look at the opening range, and let's see here. I'm on the 15-minute chart. Let's clear everything up for a second here. Let's put on our opening range and let's just go over. Extend, get rid of that. I just want the 15-minute extended lines, and that's it. Okay. This is Sunday down here, right? Let's get rid of that. Recalculate the chart, and let's look at what happened here today. Okay, going through our process, 3-hour chart, right? Momentum, let's see, is it just starting? Yeah, momentum was just starting to cross above the zero line. Didn't quite hit positive 100 yet. And, you definitely want to see CCI above the zero line, right? In some way, shape, or form, as long as it's above the zero line. Pulling back into the 3-hour trend cloud, which means, this is a corrective move. So at any moment, and it is hitting almost at the third ADR checkpoint, this could very well make its way back down all the way to Sunday's opening range. Okay. And it becomes less and less likely to do that when you start crossing the 1-hour threshold, right? You start crossing over the 1-hour 50 simple moving average. And that's what it's doing right now. So it's less likely to make another move down because we're starting the new uptrend on the 1-hour chart. And that's what we want to see, right? So we've got momentum going up. And right at the open here, we did have CCI above positive 100. That's great. But we were below, right? We were still below the 50 simple. So we've got some mixed signals going on here. So this is a walkaway trade. It's not a premium setup, but it is continuing the upward move. Hey, great. But we need to have all of our components met pre-market, because that's what we've seen make these incredible moves. So it's okay. So right now, take a look at the 15-minute chart. We've got a very bullish candle that formed the opening range. We love that, right? That's a bonus component. And when we see a bullish candle form the opening range, we drop down to the 5-minute chart and we wait for the break above, close above the 5-minute candle. It did that as well. And now we've got this breakout. Can we take a retest of the opening range here? I'd be okay with that. I'd be okay with that at this point. It's not going to be, let's see, where's the opening range? So the opening range, it would have to pull back very shallow. We'd have to have a shallow retest, right? And what would that cost us? Maybe we can go, instead of 5 contracts, Why don't we just do two? How about two contracts? Bring this below. It's a very wide opening range. That's 400. So, getting stopped out $400 when we're this close to hitting our target, is that worth the risk? And we would really need to take that full opening range, very wide opening range, right? So, even one contract, do we want to take the chance? 22, that's better, right? And we've got some targets up here. Let's put ADR back on here. There you go. So there's ADR. We've already, wow. Okay, so we first ADR checkpoint, second ADR check, third ADR checkpoint. What usually happens when we hit ADR, guys? What usually happens? We either get a deep pullback or we kind of just meander back and forth and go sideways. At this point, not something I would want to take a chance on, especially when I'm this close. You don't want to get tripped up 10 feet before the finish line. One of my mentors used to tell me that when I was a engineering recruiter. And when you're trying to close a deal and you want to make sure that you have all the objections out of the way, you want to make sure you have all of the objections handled and that your candidate is like bulletproof, right? So just another way of saying make sure all your I's are dotted and T's are crossed. So, this is important stuff. This is important stuff, and we're dealing with the firm's capital. And, do we really want to take a chance on something that's not ideal? It's better to kind of just wait, observe, and then take a look at it again the next day. So I think that's what I'm going to do here. It's very difficult to say that out loud and then watch what you just laid out work out, right? Like this is going to come back. Maybe it comes back, hits the 5-minute trend cloud here, and then takes off. I think if we waited and saw a trend cloud signal to the upside, I think that would be much better. Okay. I think that'd be more of a confirmation. But we've got momentum on the 1 hour chart on our side. We're still in a downtrend, so that could make things unpredictable. Again, mixed signals we walk away from. We just walk away from because now we're trying to convince ourselves that this thing is going to work out. So very interesting stuff. This is a real world live example of what goes on in your brain when you are trading and your brain is trying to tell you to go against your system, to go against your trade plan. And we just can't do that until you reap the rewards of sticking to your premium setups and you get conditioned for that. You'll probably jump in and out of trades. And I'm trying very hard myself not to do that. Don't want to jump in and out of trades that aren't ideal. They're not premium setups, right? We just want to trade premium setups. And so that is the story there. So third ADR checkpoint. Wow. This marathon runner has gone above and beyond what he usually does. And good run. Really good run, right? We like to use the marathon runner example with ADR checkpoints, and then we use the car example. Like right here, we've got 7 waves up. This is the gas light on your car goes off. Car starts to run out of gas. Like, hey man, we're in the 7th wave here. We got to pull into the gas station, which is below the 50 simple moving average. It fuels back up, and what did it do? This is a great example. Look at this Sunday opening range, goes 5 waves, pulls back, 7 waves, pulls back again, kind of goes a little bit further and says, hey man, I gotta refuel. And it does refuels. And then what does it do? Kind of meanders sideways for a while and then continues the move up. So this is a good indication, also good indication of price going up. All right. So there you go. What's going to happen here? Third ADR just ripped through three ADR checkpoints. Three ADR checkpoints. Is it going for a fourth? Massive upward move going on here. I think there's a lot of people who are in this right now if we jump onto Topstep TV, I bet they're going crazy right now. Like, holy cow, this thing's moving. I'm glad. I'm very happy for them. If you're in this and you're long, I think you're doing great, doing very well. And if you do that enough of times, I think what you're going to condition yourself for, what you will condition yourself for is taking short targets all the time. And you will start to hear people say, I can't get ahead. Make 100 and then I lose 100. Make 200 and then I lose 300. Back and forth, back and forth, back and forth. I can't get ahead. I can't seem to really make a decent profit. I do great, couple of days, maybe 2, 3 days, I make money, and then one trade wipes me all out. Okay, guys, what does that tell you about this particular day trader? What does that tell you? It tells you that most likely this particular day trader might not be following a system, might not be looking for premium setups. This person might be jumping in and out of trades as they see them, but they haven't identified a premium setup. Okay. The second thing it might be is targeting, right? This person may not really be taking targets. They're going on how they feel. They're probably not using ADR, right? They're probably using previous structure. Maybe they don't even know use a Fibonacci extension, right? When you don't have any structure to the left, you use that Fibonacci extension tool to make some targets. These are invisible targets to the naked eye, right? Unless you put it on your chart. And we have ADR. I think ADR works beautifully for us over and over and over again, right? What else could it be? Well, over leveraging, right? One day you trade one micro contract. Maybe for the first three winning trades because you're not really confident with your trade plan, you haven't seen it work enough. You've got one micro contract. And so over three trades, maybe you make $300, right? $70 here, $40 there, whatever, right? And then you say, well, I got three winning trades. I'm going to trade five contracts, five micros. You're still in the micros, but you take five micros and then the trade fails because you didn't get into a premium setup. You may not even know what a premium setup looks like because you haven't identified it. So when you hear and we've all been there, right? When you hear yourself saying, why can't I get ahead? Why do I get stuck? I make $1,500 and then I lose it all over a month's time or whatever, Make 100, lose 100. Make 200, lose 200. I'm so sick of this. It's probably one of those things, right? Identify the problem and you have to clearly be able to articulate to yourself, why is this? What is the problem here? What is the problem? And I'm telling you, it's probably because that person is not looking for a premium setup to follow. And they're just kind of jumping in and out of stuff that they see. And when you get to be a little bit dangerous in technical analysis, you see moves, right? You just might not be right about all of them. And you'll boost your confidence a little bit, and then you over leverage yourself and you wipe everything out. So the key to consistency is identifying a premium setup, which we have. We have it, right? We have our premium setup. And now we're going to use proper risk management. Is the risk to reward inverted between my entry and my target? Where is that stop loss at? Where's that stop loss at? Am I risking $600 to make 400 when you look at the targeting, whether that's structure, Fibonacci extension, or whatever, ADR checkpoint, is the risk to reward inverted? You've got to be able to look at this stuff. And believe me, that's what they're doing at hedge funds. Okay. They're looking, this is really not the best situation. I like my job. I don't want to get fired. I got the golden handcuffs right now. I got a great benefits package. I make a lot of money. Firm is trusting me with their capital. I can't be involved in something that's less than premium, you know, only premium setups. I think that makes a lot of sense. You guys are pretty advanced. You're not, right off the boat, so to speak, of right off right out of school. You guys have been around and you know exactly what I'm talking about. It's good to have these conversations. These are mental notes that you give to yourself. And I'm going through it as well. I am right there with you guys. So hope all of that was helpful. And we're going to just continue to watch this. But I think I'm going to make a prediction here. Tomorrow, we're going to pass the combine. I am going to pass. I always say we because I'm always thinking about you guys, but I'm going to pass the combine tomorrow because this is me up for a premium setup. Okay. Broke out to the upside, ripping through these ADR checkpoints. We're going to be well established in a 1 hour uptrend by the end of the day. There you go. So, right there, 1 hour candle has broken above, closed above the 50 simple moving average on the 1 hour chart. What is the next thing that's going to happen? We're going to see trend cloud start to make that crossover. Okay, so we're going to cross over. We're going to see that little black plus sign, like right here. That's what it looks like right there. And we will start. This is the very beginning of a 1 hour uptrend. And the 1 hour chart is our trending time frame. You have to have a trending time frame, right? And that's the middle time frame of whatever charts you're using. Okay. We like to use 3 hour, 1 hour, 15 minute. And then we drop down to the 5 for a little bit more of a, microscopic view, so to speak, right? So, yeah, so tomorrow we'll be setting up for a really nice trade. At this point, we could see a relatively deep pullback here, all the way down, all the way back down to maybe this consolidation, because we are inside of a 3 hour trend cloud, right? We always have to assume that when you're inside of trend cloud, you're going to make another impulse move down, right? Look at how the 1 hour trend cloud signal failed right away. Failed right away. Great. This is a great precursor to trend reversal, right? I love how visual trend cloud makes everything for me. I hope you like it as well. I think you guys do. So I'm looking for failed trend cloud signals, especially on that 1 hour chart. Definitely a sign of trend reversal. On the lower time frame, we saw, the on that 15 minute, right? We saw the extended trend. My God, look at this extend. This is just like super extended. And of course, the Sunday breakout, and it just took off and never came back. I mean, like we would have finished the combine. I would have totally have finished the combine today. So this is tough. This is tough for me to watch because it worked out. It worked out, but it worked out in a less than premium setup. And that's going to happen sometimes. We'll wait for a premium setup and then, we'll jump into this and give it a little latitude, let it do what it's going to do, and we'll be a bit more relaxed. Putting yourself through trade that's out there, you will stress yourself out so bad that you may have to take a break for a month. We're looking to be marathon runners here. We don't want to stress ourselves out so badly that we're exhausted